Large-cap IT consulting firm, Accenture, posted strong monthly returns in June and July of this year. Since then, the stock is trending down, which many believe is part of the recent rotation phenomenon. Is it a good time to buy Accenture stock? Let's find out. In the latest quarterly results that the company posted in June 2024, it met market expectations. It posted revenues of $16.5 billion and net profit of 12%, which were both flat year-over-year, while the earnings per share of $3.08 was down from $3.18 year-over-year. Accenture seems to be impacted from the reset of AI technology expectations that is widely seen in the technology sector this quarter. Accenture didn't have best of months earlier this year, and that has impacted the year-to-date and one-year returns. It has posted decent 5-year returns though. The latest stock price is higher than 50-day moving average but lower than 200-day moving average. The company has decent margins and decent current ratio. The PEG ratio does indicate slight overvaluation. Money flow analysis indicates institutional selling. The retail sentiment is slightly negative. The put-call ratio indicates bullish sentiment in the short and medium term and bearish sentiment in the long term. Insiders own a very small portion of the company, although there is consistent net insider selling in recent months. Looking at key financial metrics, enterprise value and market cap have experienced a dip recently, although earnings seem to be steady. Free cash flow shows a slight decline while the price-to-earning ratio is moderate. The income statement indicates revenues and gross profit holding steady, while operating income is on a slight upward trend due to decline in operating expenses. The benchmark analysis doesn't indicate consistent trend of Accenture stock outperforming S&P 500 in the last few months, but based on the recent uptrend in the stock price, there are strong probabilities of Accenture outperforming S&P 500 in the short, medium, and long term. Accenture stock has delivered negative monthly returns in September for last 5 years consecutively, so investors may want to follow the price movement and benchmark analysis closely in coming months. Historic risk comparison indicates Accenture stock's maximum price drop and average recovery days to be similar to S&P 500's. Accenture stock is currently in its worst drawdown, and medium to long-term investors may want to track the price recovery closely. Overall, Accenture has had a mixed year, and while part of it appears to be due to the broader trend of AI expectations reset, Accenture stock has done well recently. Latest quarterly results were on expected lines, and the financials are stable. In the long term, the company can be expected to benefit from its investments in AI. While short-term and medium-term investors may want to follow benchmark analysis and price movement closely, given its stable financials, investments in AI and track record of delivering good long-term returns, the stock appears to be an attractive investment for long-term investors. Happy investing!